All right. So, okay. Now, so the recording has started just to make sure it has started. All right. So, guys, if you are accessing this recording, I just want to give you a quick and a brief overview of Learning Unit 6. Some of you are working through Learning Unit 6 at the moment, trying to finalize it. Again, Learning Unit 6 and Learning Unit 7 are very short learning units. And the way they have been structured, um, it's quite easy to understand, you know. And one of the things that, I might just anticipate, ahead of time is that maybe the recording, some sections of the recording are not clear. And if you would like maybe to clarify something, feel free to reach out. But again, that's the reason why you have OneNote, right? OneNote sort of shows you how you should go about, and there's no better way. Since you are dealing with the textbook, there is no better way than to show you the flow of the textbook. But it needs to be, at that stage, you should be quite aware of what your learning unit is, especially when they're asking you a question or you're tackling a question, right? So if you go already to your past papers, credits to some of you who have already started with the past papers. You're not waiting on anything. So, and in fact, you are saving time. If you go to the past papers and you've just completed Learning Unit 5, you can look at the past paper and see which questions are Learning Unit 5 related. And you can you can attempt to solve them. And then you look at the solution and all that. So that saves you a bit of time. So when you're looking at the past papers, try to see if you are able to locate Learning Unit 6 related questions and attempt to solve them. So that saves you time. So you are already fully in the preparation. I don't believe that your preparation should be, in the next week. I don't believe in it. It puts on you too much pressure, and you're not really enjoying. You see, so start already as you are going through the last three learning units. You've already, I hope all of you have already finalized learning unit, your learning of learning unit 5, and now you are busy in the thick of learning unit 6. And once you finish learning unit 6 by next week, because I will on Friday, if tomorrow or the beginning of next week, I will already give you the lecture for learning unit 7, as well as related tutorials for learning unit 7, so that you can go through it. But one thing that is very important is what I sent you today in the announcement. It's the numeracy tutorials. When I was marking, there's still quite a few of you, and I would say about half of the class that will struggle with basic numeracy issues, right? So you have those tutorials, they're quite good. They show you quickly, and we quite like it to have them, right? So go through them. If maybe you have specific issues with fractions or ratios, or something is bothering you, because like I said, in the task 2, there were specific instances where the person understood the theory, but unfortunately made mistakes, calculus, numeracy mistakes, when it comes to simple basic um, numeracy operations such as multiplication, addition, division, things like that. Um, you know, struggled to get percentage and all that. You know yourself what I'm talking about. And if that is your case, try to check and there's no shame. There's no shame. It's better to fix it now before the exam than you see. So there is no shame. Bringing this up is very important, right? So again, this learning unit is divided into two sections, right? You have the ledgers, the ledger accounts. That's basically the most important thing, right? You know already the theory of what are the most important things when it comes to manufacturing, right? You know the three musketeers by now. You know them because you've heard me in the recording referring to those three musketeers. You know the uh, direct material, direct labor, as well as the manufacturing overhead. You know all those things. I don't need to come back on them because you know them, right? But you've also heard about this work in process, right? Which is the main manufacturing count. So now there is a ledger because you need to know what is coming in and what is going out. Money is going out, material is coming in. And that material is then allocated to the work in process, right? So you have these three um, important counts. You have the direct material, direct labor, as well as the indirect material, sort of, or if anything that is indirect, right, comes into your manufacturing overhead, right? These three things move to the actual manufacturing. So the inputs move to in the manufacturing process, right? And then the finished good comes out at the end of that. Very simple. All right, so you have your work in process. This is a very important account. But look on the debit side. You have your direct material. So on your left, when you're looking at the screen on your left, you have your direct material, your direct labor, you have your factory overhead on one side. And on the other side, look at what you have. You have the finished good. So from your working process, from your main manufacturing, the purpose is to get finished goods. And obviously those finished goods, if we look at the account of finished goods, so on your left-hand side, when you're looking at the finished goods account, you have what came from the working process. And your right hand, what you have your cost of sales, because we need to find what is the cost of those finished goods. All right. And then I provided you this. If it's in any way complicating you in any way, don't want you to even feel any complication whatsoever. You have this beautiful progression. So you have from your direct labor, direct material, factory overhead, as you see on the screen here. They are all these are the inputs that will go into the main manufacturing or production, the working process. So from the working process, you move on to the finished good. From the finished good, you will look at the cost of sale, those finished goods. And then you look at the trading, because when you are trading, you are talking about the cost of sales and the sales. Now, when you see sales and cost of sales, automatically it should click that I'm looking at some sort of profit. You are correct. That's where you will find out if there is a gross profit, positive gross profit, which is a profit, or if it's negative, it's a loss. Simple. Trust this is clear. Guys, just react. Any thumbs up? Is this making perfect sense? So you should not be bad at. I like that. should not be bothered by, oh, these accounts, it's too many accounts. No, it's few accounts that gives you a full picture. So you, as an entrepreneur, should know this, because without this, we can't trust you to be a good entrepreneur, right? And then after the trading account, obviously it's a trading account. So we are selling. So every time we are selling something, we are looking at the cost of what we just sold, all right? So that we can track, are we getting a profit or are we getting a loss, right? But even the last account here that I put here, it is for profit and loss because it's going to deal with the net profit. And this is what I wanted to show you here, is that in this particular example, this is example 6.2, 6.1 doesn't show you the cost of sales as well as the trading account and the profit and loss. So there is an account called profit and loss, but 6.2 example shows you. And I repeat again, you are seeing those things: electricity, maintenance, insurance. And you say, wait a minute, Patrick, but these are overheads. What are they doing here? Why do we need to minus them again? No. So I explain, especially in the lecture, I explain that these, yes, they are overhead, but they are non-manufacturing overhead. Remember, we minus the manufacturing overhead so that we can track if we have a gross profit. But for the net profit, we have to minus other expenses, other expenses. Okay, so all of you who are listening to this recording, remember that other expenses other than manufacturing. That's why they will give you electricity, but they will tell you the electricity for the manufacturing building or for the manufacturing plant is 70%. So you need to take the total electricity amount and at and break it down in terms of percentage. What percentage is for the manufacturing and what percentage is for the non-manufacturing, right? So this will be for everything that is non-manufacturing. When you are looking for the net profit, the net, look here, it says net profit. So this electricity, for example, will be the electricity for the admin building. The insurance will be the insurance for something not related to manufacturing. Say, Patrick, but how do you know that? You should know that before even you look. And that's why your theory part should be simple, clear. Here it is. So in the question, it says electricity is divided between what? Factory as well as administrative offices. So in the amount that they're giving you for electricity, you need to bear this in mind. The same thing is for maintenance. There is a maintenance that is factory. There is another maintenance that is administrative. There is an insurance that is factory, and there is another insurance that is administrative. So make the difference. So whatever you will get here in this account at this stage, you already have the profit. Here is your profit. You see the trading. This comes from your trading accounts. Do you see it very clear? It comes from your trading account. This profit here, profit here. This profit here. Do you see it? Here it is. This is your gross profit. So you are going to use this gross profit to minus the other expenses. Other expenses. What are the other expenses? Admin expenses, marketing, and sales expenses. You know this, you know, right? So that you can get the net getting. So there is a net profit. That's good. Why do you need to know it? This is important. You need to know these are your accounts. This is manufacturing accounting. This is accounting. And the second part, so we move on. The second part basically deals with two other things, your production cost statement and your trading statement. Obviously, you need to track your production, but I'm saying once you understand the previous ledger account, this becomes easy because you are going to deal with the same thing again. The three musketeers come back again: direct material, direct labor, factory overhead. But these are new to the financial statement. These are new. These are not, this is not a ledger account. And I explained to you they are straightforward. You are dealing with opening, closing, opening, closing, opening, closing, right? So for material, you would just have an opening inventory. Opening inventory meaning that what was left from the last period is the closing inventory of last period will be the opening inventory of this period. Then you deal with everything: net purchase, freight, custom duties, everything you must take into account. That that allows you to take the material and bring it to the production facility. Railage, customs, whatever it is, if it's there and it belongs to the direct material, to help us take the direct material and bring it to us so that we can begin the production, you have to take everything into account, minus the closing, because the closing does not belong to this period. Very simple, right? Direct labor. Labor, you will never not have labor from last period. Labor is labor, right? Labor is always this period, but you need to take into account things like other costs that are involved. Medical aid contributions, UFI contributions, you see, pension fund contributions, all these things, you need to take them into account. And then you have the factory overhead costs, right? Remember, everything related to the factory, not admin, not marketing, not sales, everything related to the factory. Okay. All right, so the same thing. So the total of these, you're going to send them here. Direct cost as well as factory overhead will give you the total manufacturing cost, because it's production, manufacturing. We want to find what is the total manufacturing cost. And then simply we're going to add remember the main production ledger account was what? What is the main production ledger account? It's your work in process. So that's why you use work in process here. It's the same thing. They belong to each other. Manufacturing, work in process is the same thing. The transformation of input into output, it is the same thing. So that's why you will add the opening work in process, you minus the closing work in process. You're adding the opening closing work in process because it will be part and parcel of this production period. But the closing work in process means that it's the leftover. We're not taking it into account. What this provides you, it's provide you with the cost of production of finished goods for this period. Cost of production of finished goods. The only two things I want to see, this learning unit is very simple. The only thing I want you to make the difference between cost of production of finished good, we produce good, and cost of goods sold. These two are not the same thing. Cost of production. We're looking at our production. Just because we produce 10 chairs doesn't mean we're going to sell 10 chairs. Maybe we might sell half of them. So the cost of producing 10 chairs is not the same as the cost of selling 5 chairs. Do you see a little bit the difference? We need to find out for finished goods sold, we need to look at what was sold and what was not sold, right? So that's why when you're looking at the cost of finished goods sold, this cost of finished goods sold, it will play a role into the trading statement. Trading, you are trading, selling. That's why you're going to deal with cost of finished goods sold. Simple, guys? Does it make sense? All right. That's all it's about here, is that you're making the difference. So when you're working on this account quickly, don't make the mistake. I say, oh, I found the cost of production of finished goods, and you take this cost of production of finished goods, you put it here into your trading statement. You just usher it here. No, 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 no. You're going to use this cost of finished good. You're going to use it to find the cost of finished good sold. How are you going to do that? You're going to do the same thing again. Opening inventory for finished goods, meaning what will coming from last year, plus the cost of finished good produced this year. And as usual, you need to minus the closing inventory of finished goods. So at the end of the year, whatever is left over, you need to minus that, because that will be used in the next year, not this year. So there will be some finished goods that are unsold. These are the ones. Closing inventory of finished goods. They are unsold. That's why you must not take them into account, because they are unsold. You just need to take into account what is sold. So this is what allows you to get this cost of finish goods sold. This one. Opening plus what we the all the finished goods that we produced this year. The opening from last year plus what we produced this year, minus what we did not finish or we did not sell, right? So these goods here, they were not finished, closing inventory of finished good, or specifically they were not sold. So I hope I make this clear. You need to feel it, that these two are not the same thing. And obviously, for your trading statement, that's what you're going to do. You are using sales minus cost of finished goods sold gives you the gross profit. So that's your trading statement. You can come on. That's all. That's all. That's what you're going to be asking. If you get this in the exam, instead of panicking, you should be like, come on, this is easy. This is ridiculous. I'm not only I'm gonna ace this exam like crazy. So that's basically the principles that you need to know. The rest, as you know, it's practice. Please do me the favor, practice. So let me check again my time here. Like I said, I don't want a long recording for all of you. Because I know you're going to be frustrated at me. It's like we are being provided too much. Um, okay, it seems like it's already, oh, I've already crossed. So guys, I'm going to stop the recording here. If you have any questions, for the people who are here, you can stay with me, but let me stop the recording here for the rest of the class. Um, Esther, does this make sense?
Yes, sir. It does make sense.